As always, I like to start off by looking at interest rates. And I've got plenty to talk about this month, as you might imagine, could fill the whole presentation on this. So where do we start? Now, the first thing I've got to say is at the time of recording this, it is Monday, the 19th of June. By the time you're watching this, I suspect it will be after Thursday, the 22nd of June, which is when the Bank of England next meet. And I suspect rates will have gone up. So let's take a bit of a dive into this. So right now we're at 4.5%. There's been 12 rises, consecutive rises in interest rates by the Bank of England in recent years to bring us to this point. I suspect it's going to be at 4.75% next. No real surprises that there's another raise. I've been suggesting all year that there will be more rises to come, and possibly in June or July. But given what's happened with inflation rates, that's the main reason why the Bank of England are actually putting rates up maybe a little sooner than some people might have predicted. So I expect them to have gone up to by 0.25%. But given what the Bank of England have come out and said in the last few weeks, essentially inflation is being stubborn. They're not allowed to swear, so that's the phrase they tend to use. And then the inflation isn't dropping at the pace that they said it would drop back in the early part of the year. And that's what's caused the big ripple effect. Now, you might say, well, what on earth has inflation got to do with the Bank of England and interest rates? Haven't really time to go into the detail. One, I'm not an economist, but two, it can take quite a bit of a time to explain. So other than it's part of their remit to try and get inflation down, and they use interest rates as some sort of real blunt instrument to do that. That's all you need to know for today. And so they're going to put interest rates up, I suspect, to try and have that impact of ultimately bringing inflation down. So given that inflation is dropping at a slower pace, therefore, I would certainly read into that I would expect further Bank of England rate increases in the year. Now, hold on, before we all get too upset and thinking that's going to translate to mortgage rates, my personal view is it will not. It will not translate into mortgage rate increases further down the line, and I'll explain that shortly. But I do expect the Bank of England rate to go up. If it's at 4.75 when you're watching this, I would expect it to go up at least another 2 times this year, as far as we know. If the Bank of England have to come out again and say that inflation is dropping at an even slower pace than they've currently come out and said, then that's when I'd expect even more interest rates from the Bank of England. But if they do not, if the pace drops, it's at 8.7% right now. They were saying it was going to get down to 3% by the end of the year, and I think they revised that to maybe 5%. Forgive me, I'm not totally sure on the numbers, but you get the idea that it's a slower pace. So it's that revision by the Bank of England that not only means that the Bank of England are going to put rates up, but as what has initially caused mortgage rates to increase on this one occasion. So long as I say, the Bank of England don't revise their forecast on inflation again, then I would anticipate that the financial markets, these are the people who are ultimately fund the non-bank lenders. And I would think that most people watching this video, when they're getting mortgages, are not going to the high street banks, because high street banks, as we know, don't like portfolio landlords. So it's the secondary lenders that have to go to the financial markets in the first place to obtain wholesale money. And it's how that wholesale money is priced, which is based ultimately on or partly due to how inflation is dropping. So because that revision by the Bank of England means it's dropping slower, has had a knock-on effect on the wholesale cost of money, which then feeds through to what we see when we're getting buy-to-let mortgages. So that's the circle. So as long as that forecast on inflation doesn't change, even though the Bank of England may still be putting interest rates up again. The financial markets know that, they're expecting that, and they're building their prices in knowing what the inflation is going to drop at based on the Bank of England predictions in the last week or two. So as long as that does not change, I do not expect further mortgage rate hikes. However, clearly over this last month, a lot of volatility, and why we saw the initial rise over this last month, and are still seeing it right now. Sadly, because for reasons that I don't understand, because we're getting into the nuances now of pricing of wholesale money, which is clearly out of my skill set, it's taking the financial markets a little while to price up their what are called swap rates, which work through into the wholesale cost of borrowing, which then feeds through into the secondary lenders' retail pricing. It seems to be taking a little while because it's been quite a few weeks now where lenders have been pulling deals and replacing them with higher rates. And as I say, that volatility, that uncertainty is, I'm still seeing, has been going on up to last Friday. I do expect that to settle down literally in the next week or so. That should start to settle. So the rates that we're now seeing with on mortgages should start to settle. So in terms of your decision making, whether to buy properties, whether to refinance, the sort of rates that your brokers will be coming out with now, today, this week, I don't expect to change much more from where we're at now. Maybe minor tweaks, literally 0.1 perhaps, but no major changes in rates is my view. And that's the message I want to get off. What I would also want to point out, that bottom next to last bullet point, please be patient, be kind to your broker. We are the middlemen in this process. And unfortunately, lenders are giving very little notice when they've been pulling their deals, which makes it really frustrating for you as the customer, but also for us as the broker when we've been talking about interest rates, and then when it comes to it, the rates have gone up slightly. And like I say, because the deals have been pulled with no notice. So the last takeaway point I want to make on this slide is, if you are looking to buy this year, in the near future, is get your ducks lined up, get everything in order. Look at your 22, 23 self-assessment returns. I know I can hear you saying they don't need to be done until September. You don't need to even do it till January 2024 from a tax point of view. However, if you're wanting a mortgage, we need it now. We need them today. So talk to your accountant. Get them to put it at the top of the queue so that you can get your tax returns done sooner, and then you'll be able to get your mortgage application in. So this is what I mean about getting your ducks lined up. If you've not done those 22, 23 returns, then you should be on with it so that you've got them in hand. You don't have to pay the tax bill. You can have your returns done now and pay your tax in January. It's the documentation we need as the brokers. Other things like, have you checked your credit report for a little while? If not, get a copy of it. Have a look through it. Is there any skeletons in the cupboard? Is there any late payments on there that you didn't know about? Is anything that we don't want surprises? Anything that might be a little bit of a shock? Check it out. You can get them for free. So do that. Your bank statements. What about those? Have you got the right address? Have you moved address recently and never changed the address on the bank statement? People don't do it nowadays because everything's online, but from a mortgage point of view, it has to reflect the current address. So things like that, speak to your broker, see what he or she wants, get that shopping list of documentation from them, and lodge it with your broker so that when he or she does show you that rate, you can say, yes, get on with it, and we can get that application in same day, maybe in 24 hours.